Welcome to a short 10-minute presentation on First in Financial. Many people have asked me my reason for starting First in Financial. It was because there was no easy value-based system out there that really used Warren Buffett's system for doing stock investing that could start fresh, because Warren Buffett now has several $billion of investments out there and can no longer get the small returns that have a much higher rate. My friend and me were therefore looking to pick stocks, and we figured a way of doing it using value investing, and it worked for us. We were getting double our money back after a few years, and we thought, why not let everybody do this? But everybody can't do this. So we created an AI that would do this for you, that would make it easier to do it. And we've tested it over the last 7 years in live tests, and we got 26% average annual returns. It's been tested. It works over 100 years of back test. It's worked in 7 years of live tests. It's ready for anybody to use to beat the market on average. So where is a true value ETF that's an electronically traded fund that does this? There still is no fund out there. There's been many attempts over the years. Many people have done it for a short period of time, such as Harvard and Yale's endowment funds, and then it suddenly stops working for a while. You can invest in something that's been working over the last few years, but can you invest in something that's worked over the last 100 years, like the Benjamin Graham system that Warren Buffett uses? The value proposition here is a 20% internal rate of return. It has a low beta relative to its gains, which shows a high alpha. The 7 years of consistent market-beating strategy has been using real money, my investment accounts among other people's, and we've shown 126% returns over the last year, 3 years 35%, and since inception about 26% average annual returns. This is about what Warren Buffett was getting during his early years when he was investing only a few $1 million. Why do other AI approaches that try to do this fail? The magic is an AI filter. You need to remove the fraud, the bankruptcies, and the bad data. This is because your AI is only going to be based on data, and people can just make up numbers. One example would be Enron or the Chinese stocks in 2014, where this was going all throughout the Chinese stock market. They eventually crashed and had to apologize for it in 2017. The filter that's here takes any of those values that people have just made up data, and it removes it from the system. And once you do that, you'll start making money. This could also be an improvement to existing index funds, to any system that currently is supposed to beat the market, like a low price over earnings system, or the magic formula that is out there and has also beaten the market, but it has this problem, because once you start using any system en masse, people will start making up their numbers to match your system and take advantage of you. The business model here is that you're going to have an equal investment in 20 to 40 stocks. You're going to monitor those for bankruptcy and fraud and immediately sell if you see any. Every 3 months, you're going to drop the lowest scored stocks and pick the new ones that are the highest scored. And you're going to analyze all the 6,800 stocks in the stock market for the numbers for fraud and bankruptcy. And these are some of the stocks that were picked that did very well. The competitive analysis here is that you could, for example, invest your money in cash, in bonds, in the Standard & Poor Index, and you can see how these do. You're going to get somewhere around 10% risk and return, 10% being the standard deviation. That's a measure of your risk. And you can measure your risk and reward here on this chart, where you see the good area up here and the bad area down here. You want high rewards with low risk. So let's see how the First In Financial does compared to these. This is the old area where those were. And this is where First In Financial has been returning over the last few years. As you can see, you can get 45% returns with 30% risk, which is way above the line. The First In Financial can be mixed with bonds and real estate investment trusts, which would be my recommendation, and that can give you a much more reasonable return with a much lower risk. But look how far above this line First In Financial comes in. That's because it is based on alpha, it's based on real returns, it is based on a real kind of investment strategy. And let me talk about that real kind of investment strategy here. What we're talking about is a long-term investment strategy that is going to invest in companies that need the money, and they're going to take that money, and they're going to take that invested money, they're going to borrow money based on it, they're going to sell their shares based on it, just to get some cash. They're going to turn that cash into a better business. That is the real kind of investing that Warren Buffett does and that this AI system can do. It's not like any other AI system out there, which might make $1 million in 1 year and lose it the next, because it's only based on making money by taking it from somebody else. This is actually based on a long-term investment strategy where you're not just going to take money out of the market, you're going to be adding value back in. And now you can balance this risk and reward, and here is our management team. It's myself as the AI guru, the enterprise architect, and the financial advisor registered in the state of Pennsylvania. And we have some AI programmers who have helped us from Google, from Carnegie Mellon, from FedEx, from the University of Berkeley. And they've been helping me with the new deep learning algorithms and neural nets that are used in the empathy filter and in the original algorithm, which is mostly neural nets. The accountants and lawyers are signed up here, but they're not listed. We have financial projections and key metrics here. The past results don't guarantee any future returns, but we have found that on average, after a market crash, you'll find a lot more value stocks out there, and that's when you can make up to 2 times the returns. And it usually makes up to 2 times as much back whenever the market drops. You're still invested in stocks, so they'll still drop with the stock market, but you can get that huge return back if you stick with it after the market crashes. The current status and accomplishments to date are as follows. The software as a service was launched in November of 2020, showing an average gain of 130%. That's after the empathy filter was added, and due to the market downturn in the early parts of 2020 with the COVID, you can see that much higher return just after COVID, just after the market crashed. In November of 2020, we sent out our stock pick emails. If you had followed them, you would have gotten 130% returns. We have 50 people on that stock pick email now. In May of 2021, we had a new enterprise forum presentation video. And in July 2021, we came out with a stock information software as a service. This is the platform that we've been talking about. It shows all of the returns that are likely for stock. It shows all of the AI-based information together with all of the information that's out there, together with things like fraud and bankruptcy information. And we have a sample on our website now. In August of 2021, we came out with the Monte Carlo simulation, which shows the possible returns that you can have. That is also on our website. If you have questions about the future directions, we have $10,000 of AWS credits that go into Bodo AI and new algorithms. It's all ready to go. We're ready to hire people. We have investment-ready suggestions with 4 current investors who are investing with me, and all these investments can be put in the stock market, but it's always recommended to balance that with a second investment strategy, such as real estate investment funds or bonds. And as your financial advisor, that could be me choosing the balancing accounts. Thank you, and hope you learned something. Hope this was helpful to understand a little bit more about my system. We will try to come up with some educational strategies so that things like a value investing system and the Benjamin Graham method and just basic stock market investing like low price over earning can be explained. But if you're already familiar with those terms, then hope this was a great video. We have some short articles on the definitions for those things that can be available for you if you need. Thank you.